Hey everyone, welcome back to the Atlanta Divorce Law Group's Facebook Live page. I'm attorney Sarah Kaki and I'm joined here with Mike Bean. I am so honored to have Mike here today. Mike is a CPA, but he's also a certified divorce financial analyst. Now, if you don't know what that is, you really need to pay attention to this Facebook Live and learn about why that's so important if you're getting a divorce to have a certified divorce financial analyst, and even more importantly, how the new tax laws are changing the game for divorce. Mike's here to break it all down for us. It boggles my mind why more people are not talking about the tax laws and how it's affecting people that are getting divorced. So if you're thinking about getting divorced, you're in the process of getting divorced, you already have a prenuptial agreement in place or even a postnuptial agreement, you need to sit down with a divorce attorney or somebody like Mike to discuss things such as how this is going to impact your alimony, tax exemptions as far as dependents, the child tax credits, and other itemized deductions that this is impacting in the settlement agreement. We have a huge deadline coming in front of us in the divorce family law world and the tax world, which is January 1st of 2019. That's when these new tax laws are going to go into place. So if you are one of those families that is splitting up this year, you need to really pay attention to what Mike has to say, because if you don't get your settlement in before the end of the year, all these things are going to take effect. So Mike, thank you so much for joining us. I really appreciate you being here and breaking this down. For so many people, taxes are not the sexiest thing in the world. It's not very exciting, but I have been honored for our firm to work with you guys. We've brought you into a lot of our mediations, a lot of our settlement conferences to help ensure that our clients are financially set and are looking at their entire pie and coming out with a healthier picture of how they're breaking things apart. If you could tell us a little bit about your story and how you found yourself down the path of niching into divorce and financial advising, advising people that are going through the divorce process, and why this is so different than just your typical financial advisor.
Absolutely. First of all, thank you so much for bringing me on. You said it so well that people are not talking about this,
yeah,
and the impact that is impending and looming right around the corner is huge, and I'm glad we're going to have this opportunity to talk about it. So people ask me all the time, what do you do and how did you get into that field?
Yeah.
And the only way I can explain it is by sharing what happened to me. It's hard to believe, but it's been almost 12 years since I got divorced.
Yeah, you have a fantastic divorce story. If you don't mind sharing it with everybody.
Absolutely. 12 years ago, my ex-wife now approached me about a divorce, and as much as I was caught off guard, we sat across the kitchen table and we divided up everything. We came up with the numbers that we thought made sense,
yeah,
that we could afford, and we had an agreement, basically a verbal agreement in place. But then she hired an attorney, and I say that in all
and we
respect.
live happily ever after.
Then you obtain an attorney and counsel when you do get divorced. But 10 months later, and tens of thousands of dollars later, we had a divorce that mirrored almost exactly what we had talked about
at the kitchen table.
Right across the kitchen table. So not only did we lose out on all of that money, all of that time we can never get back, and all of the emotions, the roller coaster of emotions that go through this process are tremendous. So a year later, I asked her, why did this take so long? And I think I said it was 10 months. It was actually 14 months. And she said to me 3 things that really resonated with me. She said, number 1, all of my girlfriends were whispering in my ear that I could do better.
Yeah, yeah.
So we always tell people, try to tune out that noise,
yeah,
right? Number 2, she said, don't take this the wrong way.
Yeah.
My attorney said he could get me better.
Yeah.
And number 3, she said to me, and this is what really resonated with me. She told me, she said, I didn't understand the financial picture of how this settlement would portray into my future.
Yeah.
I didn't understand that. And that's what really resonated with me, because at the time I had a financial planning and a tax practice. And what we do is really the intersection of financial planning and taxes as it meets the divorce process.
Right.
And so since then, out of that conversation, my practice was born.
And I think that's so important, because we get clients that come to us all the time that mention, you know, my financial analyst has looked at all this, my financial advisor looked at all my stocks, bonds, IRAs, and this is how then they think that they're set because it had a financial advisor look at it. But from our experience in working with you guys see room for so much more opportunity and also so many more red flags that a financial advisor that does not specialize in divorce would not be able to see. And you bring something to that mediation table, to the settlement conference that a typical financial advisor may not be able to.
Yeah, and it's important not to view your professional team as an expense. There's always a return on investment.
Right.
That's what we tell everybody. I don't know what it's going to be when you first meet with us, but there will be 2 or 3 items that there is a tremendous return on investment for our time and the expertise that we bring to the table, especially as it relates to tax law, because it is one of those things that I find sexy, but most people don't.
Yeah. So, Mike, we do have to get to, one of the reasons that it is so important to have a financial advisor that is well rehearsed in divorce law is specifically what is happening with this new tax reform that was passed in December of 2017, and really a lot of it takes effect as of January 1st of 2019. A lot of financial advisors out there are not talking about it. A lot of attorneys out there are not talking about it. I'm not sure why. But Mike and I sat down and we're like, why is nobody talking about this? You were coming out of a mediation that you were doing for one of our clients, and we met in the hallway and we're like, why aren't they talking about it? So we're like, we got to kind of give some general information out to the public. So we're going to talk a bit about alimony because that's one of the big things here that gets impacted. But guys, stay tuned, because even if you're not somebody that is concerned about alimony, there are other parts of this tax law that could very much impact you in other aspects of your divorce. So let's get to that big giant elephant first. Absolutely. Alimony. Just to give a little bit background, alimony is not available in every case. Alimony is available when we have one party that has the financial ability to pay and the other party has demonstrated that they have a need for that alimony. So we're looking at disparate income here between the 2 spouses. So how is the new tax law going to impact the alimony conversation?
Great question, and this is really the crux of the change. There are several other items that are being impacted, but this is the big one, and the snowball effect of this is tremendous.
Yeah.
So currently, the law reads that if I am paying alimony, I get to deduct that payment on my tax return. And if you think about it, the person paying alimony is typically the person who is in a higher tax bracket.
Right.
So it's favorable to me. I get a tax benefit. On the flip side, and we call this income shifting in our world, the recipient has to actually claim that income as taxable income.
Right.
That's the way the tax law reads today. And that is what is going to stay in place for every divorce case that is in place now and will be in place up until any divorce decree that is signed as of December 31st of 2018 of this year.
Right.
Right? So that income shifting stays in place if you get divorced this year. And so that right there creates a tremendous push-pull and competing interest because the law changes on January 1st. And what's going to happen is alimony, the payer, if I'm paying alimony, I no longer get to deduct that on my taxes. There is no tax benefit for me. And the recipient no longer has to claim that as taxable income. That's a big change, and that affects so many different parts of the tax return.
So on its face, that looks like, well, that's going to be preferable to the person who is receiving alimony, but not preferable to the person who is giving alimony, because before they used to give pre-tax dollars to pay their alimony. No longer the case. But it's also not necessarily all favorable to the party who is receiving the alimony. Because you kind of educated me on this, how this is going to impact their IRA options.
Right, and great point. So what happens now for a lot of people, alimony may be their main source of income or their only source of income, or sometimes it's just an additional source of income. But to be able to put money into a retirement account, if your only income is alimony, when it was taxable, which it is currently now, you can benefit from contributing to an IRA or to a retirement account. Come 2019, if your divorce is finalized after the date, that income is no longer taxable to you.
Yeah.
And the tax code specifically states you can only take a deduction against taxable income. So if that is your main source of income, you do not have any taxable sources to reduce your income by. And on top of it, the best guess, what we're seeing is alimony will be reduced because there is no longer that taxable benefit to the payer. And so cash flow to the recipient is probably going to be a little bit tighter because they're not going to have as much money coming in from what we now consider a payment that makes sense in alimony the way we calculate it today.
Right. So one of the things that we always educate our clients on when we're at the settlement table or at the mediation table, and you guys have been through plenty of those, so you see this as well, is that, you know, the end of the day, there is one pie that we're dividing up. Right. And so when the payer is hit with a tax law that is going to financially hurt him, it does hurt the other side as well, because now there's less cash in that pie to go after for both sides.
That's exactly right.
And so this is one of the reasons, if you are considering getting divorced or you're in the process of getting divorced, you probably want to try to, you want to get this settled. You want to get this divorce settled before the end of this year, because if that divorce decree is signed any later than December 31st, 2018, these tax laws go into effect. Before that, you still fall under the old system. Right.
And I want to spend another minute going back to what you talked about the definition of alimony.
Yeah.
Because I think that's so important. In Georgia, alimony is not, it's not formulaic. There is no calculation like child support. It is based on the ability to pay for the person paying alimony and the ability to demonstrate a need, that you actually need that alimony payment. And I think one of the things that is so important that I believe we do really well is help to demonstrate that need through cash flow projections, through spending time with our client to help them understand what is their budget going to look like post-divorce life. And I think understanding what post-divorce life is going to look like helps so much with this process, because then it's not as scary whatever the financial settlement is going to be, because when you understand what post-divorce financial life can look like, it can help you make an educated decision through this process. And we tell everybody this, and you know this, we've had this conversation before, you're not divorcing the person you married, right? It's an irrational, emotional process that brings out the worst in a lot of people.
Right.
So the more educated you are, the more educated your decisions can be.
Right. And you know what's worth fighting and paying attorney's fees for and what's not, right? And I'm glad you mentioned, having a better sense of what's post-divorce life going to look like financially, because for so many of our clients, it's that fear of the unknown that makes this whole thing very emotional and very scary. And if we can just kind of get to see a little bit more and more what life's going to look like, but putting some dollars and cents to it, divorce cents to it, then we'll be in a better shape. Okay, so the next big thing is we have a few itemized deductions we need to discuss. So even if you're not affected by the alimony, pay attention to this.
Okay, good points. So there are a couple other items in the tax code that are going to be changed. Okay, and one of them is a dependency exemption. We fight a lot during the divorce process is who is going to be able to claim the dependency exemption, because currently it's worth $4,050 per child.
And now it's
going to zero, right? So that fight's off the table.
Right.
If our divorce is postponed past January 1 of 19. So currently, if we go through the process, that is an important concept that we will still be able to be grandfathered in and claim that deduction for this year.
Yeah.
It does go away next year, but it is worth some money. So what is the offset? What has the tax code done to change that? They have created a larger child tax care credit. Okay, that's actually doubled from $1,000 to $2,000. Okay, so that's important. And the income limitations, without getting too into the weeds here, most people couldn't qualify for the current child tax care credit because of the income limitations are so low.
Right.
But that number is going up to a significant level that most Americans will be able to qualify for it. So that now becomes something we need to incorporate into our strategies for divorce planning. who is going to be able to claim that credit?
Right.
And there are several other credits that are more minor,
Yeah.
but your attorney or your team needs to be aware of, because these are things that are worth fighting over because they're real dollars.
And it's important to note that the child tax credit, child has to be under the age of 17.
Correct.
And the custodial parent that has lived with the child for at least 6 months can claim it, but this is something that they can give to the non-custodial parent, the child tax credit. Is that
Right.
correct?
It can be given, it can be shared, not shared rather, it can be given, it can be transferred year to year.
Mm-hmm.
The law is not clear right now on this new credit, on what's going to happen there during divorce. So we are waiting for version 2 of Trump's tax law to come out to give us more clarity.
And we'll have another one of these for that.
I'll take that as an invitation to come back.
Absolutely. And so, Mike, there are also some itemized deductions on attorney's fees that you pay for getting spousal support.
Right. So the law currently reads right now that you can write off your attorney's fees as it relates to tax advice and advice towards spousal support. And those can be significant dollars. That goes away. The itemized deductions for those 2 write-offs are completely eliminated next year. So again, and if this is something that is on your mind, this is the time to take action on it. Not that we're pushing people toward divorce.
But if they're already there.
Right, if they're already there.
If they're already there, if you're already at the divorce papers have been filed, you need to really consider how you can reach a settlement before the end of this year.
Absolutely.
The other one that you and I discussed earlier that I thought was important too was the deduction on the mortgage interest.
Yeah, so let's talk about that. So currently, if your mortgage on your house is less than $1 million, the interest part of your mortgage payment is tax deductible. That amount has been reduced down to $750,000. So if your mortgage is $755,000, you can no longer write off any of that interest.
Yeah.
So that's a tremendous impact, going from a significant write-off to 0.
Right.
Right?
Right.
You need to be aware of that. That also includes home equity loans. No longer you can write those off. And that started this year. What's interesting is the tax law changes related to alimony are the only part of the tax change that was put in place but won't be effective until next year.
That's why that one has such a huge time frame on it, and that's why, the typical time frame of an average divorce, anywhere from 6 to 9 months. So if you are lucky, you start your divorce process in June, you may get it settled in time to be grandfathered into the old tax laws that are more favorable to you. But if you are thinking about divorce, you really just have this month or the next month to get that ball rolling, to ensure you get your settlement in place by end of December.
That's a good point, because remember, it has to be signed by the judge, not just agreed upon, but then the rest of the legal process takes place, which is documenting the divorce.
And so we really should say this is a longer than the 6 to 9 months, because I think what's going to happen, Mike, come October, the courthouse is going to have so many settlement documents in front of them. They're going to be overwhelmed with finalizing these papers that everybody's kind of woken, come to their senses. More people are having the conversation we're having today, probably not till the 4th quarter. And at that point, the court's going to need more than that average 1 to 2 month lag time to sign off on your settlement. Because to Mike's point, saying that my husband and I, or my wife and I, we've signed on the settlement papers, we're done, doesn't finalize it. It has to be a divorce decree signed by a judge.
That's a good point. And, outside of this conversation, there are so many things that need to be decided financially that you can take advantage of, that can be beneficial if the parties can work together, if it's fairly amicable. And those are probably topics for another conversation. But divorce, unfortunately, is part financial. There are big decisions that need to be made. Do you sell a house? When do you sell a house? Do you sell it while you're married? Do you wait till after you're divorced? What is the tax ramification of all of those things? Basis in stock, in mutual funds, in investment holdings, capital loss carry forwards. So many issues need to be discussed. And that's what lends to a lengthier process.
Absolutely, absolutely. And I think that really when you take out the hurt and the child custody issues of it, the courts really look at divorce as a business transaction.
Right.
And that is why it is so important to us to have something like Divorce Sense to say this is part of our team that we offer the client. Because it really is, at the end of the day, a business transaction when you remove the emotional side of it and you remove the parenting part of it, right?
Well put.
I'm going to make sure I didn't miss anything else. Okay, so just, I guess the final plea, I mean, really, if you have an attorney, please bring this to their attention. If you haven't already considered getting a certified divorce financial analyst, really think about adding that to your legal team for getting through this divorce, specifically this year. This year is probably more important than any other year to do that. So, Mike, have I missed anything? Anything else you think we should cover on this?
No, I think we've covered it all.
Okay.
Outside of the why. Why did the IRS put this in place?
Yeah. Why did the IRS put this in place?
Real
Thank
quickly,
you.
it's a money-making opportunity for them. If you think about it, typically the higher wage-earning spouse is the person who gets to claim the deduction. They're at a higher tax bracket. So now they no longer get to reduce their income by that taxable amount.
Yeah.
And going back to what the current laws are, the income shifting, where the lower wage-earning spouse who's receiving that alimony in a lower tax bracket, believe it or not, that differential between the higher and the lower tax brackets last year was, based on the calculations, was going to add to the IRS coffers $6.9 billion.
Wow.
$billion with a B. So this is a big revenue producing aspect of the tax code for the Trump administration.
Okay.
And the second point is, I believe if I have my numbers correct, now if you give me a minute here, I'll do this off the cuff, 317,000 people claimed they paid alimony last year, while only 186,000 people claimed they received alimony. So there's some disparity there where the IRS is not collecting what they feel entitled to. So this is just a revenue generating mechanism for the IRS
close that gap.
from my perspective, right? However, it is, if there's ever a time to plan financially through a divorce, this is the time.
This is it. Okay. Mike, how can they find, if anybody's watching would like to learn more about Divorce Sense, learn more about what you guys do, how can they find you?
Great, thank you for that. You can find us at our website, it's divorce-sense, SENSE.com, or you can reach me directly at mike@divorce-sense.com, or my office number is 770-790-5050.
And you guys, we feel incredibly strong about this. Like Mike said, I mean, this, you only have a few months, and then this is opportunity to be grandfathered into the old tax laws is gone. So please send us in any questions you have. You can message us on our Facebook live page. You can go on our website, atlantadivorcelawgroup.com. We will work with Divorce Sense to help answer your questions and guide you guys through this process. If you already have an attorney, if you already have a financial analyst that knows divorce, not just a financial advisor, but knows divorce, please bring this to their attention if they haven't already brought it to your attention. So thank you for joining us, and we'll see you again next week. Thank you, Mike.
My pleasure. Thank you for having me.
Absolutely.